So just looking at the chart of euro yen, it's pretty much the same for any yen based pairs. Today is the 29th of April 2024, and this candle here, let's get the crosshair going, was on Friday, and I know that with the USD yen, it had reached, or it was getting to highs, it was breaking highs, and I think the yen index overall fell to its lowest point in 34 years. So there was some talk of the BOJ, Bank of Japan, intervening to sort of ease these reactions in the markets. Quite interesting, really, just to sort of see what happened. It closed quite high, which would have probably given people the impression that it would have continued to go higher. But instead, it did, but it was a spike. There wasn't really any confirmation that the market is sort of stable at any much higher price than where it spiked at. But it's interesting, really, because the open was here, okay, and the algorithms that I have measure the volatility of daily candles, and in this case the volatility would have been in breach because it's just too much of a bigger candle to be trading. So basically trading for the day is suspended until it goes into the next day, purely because of the volatility measure from the open. Even from the open to the low, we're talking about, what's that, 3,000 pips. Sorry, not 3,000 pips. It'll be that divided by 10, the middle number, so about 300 pips also. And up here, nearly 300 as well again. So, you know, we're looking at a 600 pip range candle, okay, which is extremely high in volatility, especially when you look at all the others. So if I just to put this into a bit more context, let's see. So this is the one we want, right? Okay, don't know if that's straight, but it doesn't really matter. Let's just move this up to here, like so, and then move this here, okay, and then as you can see, this is the biggest gap so far for today, but let's just make this smaller. Okay, so the point I'm getting at is, well, when you move, there's no one candle basically that falls within that range. This is a daily chart, so there are obviously, you know, more than a day's worth of candles that could equate to that range, but I'm talking about just individual candles, sorry. So we're March, January, so we haven't really seen anything like that this year, to be fair. Even here, let's just have a look at this one, zoom in on this one. This was the previous year. Okay, so here, let's get the crosshairs going. That would have been last year. So that was an even bigger move. But as you see, there isn't really any other situation where there's one individual candle that's like that. Let's just double check this one. Sod's law, you always find no. So yeah, I would safely say that yeah, there hasn't been anything like that for this year. And let's just have a look at this one. Yeah, this candle here. So it's quite a significant move, obviously, in these sort of conditions. The algorithms don't trade. So having a look on the sheet here, measures the gap. At the time I'd run this was probably earlier, so things may have changed since then, but it's basically saying that the open to the high was 281 pips, and the open down to the low was 244, and the sum is 526. So quite a bit, really. And I think these kind of volatility measures do help. The reason why I incorporated it was because I think this was going back in 2022, where I suffered probably one of the biggest losses I'd ever had on a live account. And that was shortly after some announcement that Kwasi Kwarteng, who was the Chancellor at the time, made about the pound. And yeah, it just went down. But prior to that, it had went up, and I'd made quite a few trades whilst I was sleeping, and made a lot of money. The algorithm kept on opening, closing, opening, closing, opening, closing, opening, closing, and they were closing in profit. But then eventually it turned around and cost me to lose quite a bit of the account. And I was initially, when I was trading, I wasn't really having any risk management procedures set into the algorithm. I felt I was a little bit cocky. It was like, oh, it was easy to get 14%, 10% per month. 10% was like the minimum. But of course, that was just basically taking a lot of risk that I shouldn't have been. And it basically came to light when the account lost quite a lot. Now the thing is, I got into the emotional state because I didn't have any sort of risk parameters in place. This was in the initial stages, and so I'm sitting there watching the screen whilst the trade is like going against me, and I'm thinking, oh, it's going to turn around, it's going to turn around. It always does, because in sort of similar situations, not as bad though, but other situations it had. And I always just relied on the fact that, or the hope that it would turn around. And in this instance, it wasn't. And I was like, well, I've got to make a decision here. Do I lose the whole account, or just, cut my losses and, and just basically accept that I'm wrong, And when you've been doing it for 6 months at that point, you're kind of thinking, you don't want to admit defeat. So, I pulled the plug out, took the loss, and it was a good job I did, because if I didn't, analyzing the trades after showed that the account would have blown up, basically. So yeah, and I've learned a lot from that. So I think it's always a good thing when these things happen and you're able to survive, or the account is able to survive. Even if it isn't, you can always start over and take into consideration the errors you did, and you learn from them. So as long as you don't obviously repeat what's happened, everything should be fine. And it has been. Any losses that I've incurred have subsequently been less than the previous losses. So I'm structuring the risk management side of things into the algorithms, and making decisions about what lot sizes to take, how many sets of trades to take at any given one time, factoring in indicators such as the RSI, which really does help. I know it's probably one of those things where people sort of use RSI and they never really quite use it right, but for what I'm doing, it's perfect for me. along with the volatility measure. All these things really came about due to the fact that I've incurred a heavy loss a few years back, or a year and a half ago now or so, and since then, that hasn't happened again. So I would say risk management is really key. I think it's what is the most important thing, and it should never be overlooked, no matter how well your trading is going, because it's only going to be a matter of time before the luck is going to run out or it's going to turn against you, and you're going to wish you had something in place. Anyway, thanks for watching, guys, and see you on the next one.